Great. Good morning. Is it working? Yes. Yes. Good morning, everyone. Excellent forum here. I hope you had the chance yesterday to enjoy what Madrid can bring, but still sharp to participate in this great panel. So the idea today is to discuss about the state of the European venture capital. And is a thriving ecosystem. European venture capital is a thriving one. Europe is at a crossroads with increasing tension from competition from blocs like the US and China. And venture capital has proven to be an instrumental tool to support growth and innovation, much needed nowadays. And this side of the room, you have among the largest institutional investors in Europe. We have, starting from Mercedes, she's a leading figure taking care of the EU affairs and with a lot of experience in investment side in her shoulders. We have over here Manuel as well, leading GDP based in Italy. And Jörg as well, KfW from Germany. So the idea of this panel will try to guide you through and give you a bit of visibility of our organizations. We'll enter on our perspective from how we see the market and challenges and give you an overview of some initiatives that ultimately are deploying in order to tackle those sides. Please, this is a forum, it's not just a panel. So make it interactive, ask questions. We will reserve a Q&A section towards the end, but let's make it a discussion. It's an excellent, unique platform, I find, of LPs and GPs. Mostly we see for the hands, mostly GPs. Shall we start maybe from that side of the room? Jörg, can you give us a snapshot of your organization so everyone gets an idea of who is KfW and
sure.
what role it plays?
Simon, thank you very much. And Liz, very many thanks for organizing this. I think this is a great event. KfW Capital is a subsidiary of KfW Banking Group. We are a startup as well. We started our activities 8 years ago. We are now one of the largest LPs in the asset class European venture. So we started investing in venture capital funds 2018. With a team of 18 people. We are now 125 and we're growing further. We have invested in roughly 160 venture capital funds, all European venture capital funds. And we have financed by this roughly 3,300 startups across all industries. We invest sector agnostic and phase agnostic. Besides our investment activities in venture capital funds, we also do direct co-investments in later stage companies. We have a budget of 1 billion euros for that. On the fund side, we have committed 3 billion euros. And we have also raised a 1 billion euro fund of fund, which is dedicated to private sector investors. This fund of fund is investing alongside our later stage strategies. And we have LPs from pension funds, insurance companies, large single-family offices co-investing alongside us. So we are on the one side a sovereign investor, and we are also a private sector investor.
Maybe briefly, in terms of geographical focus, you're based out of, and I guess it is Germany, but also open to other strategies?
Definitely, very much so. Our fund investment strategies are pan-European. And we invest in Spanish funds, in Italian funds. There are not that many yet, but hope to come.
Coming.
Yeah. We invest in French funds, but of course we invest in German funds. If I look at the portfolio of our 160 funds, only roughly 40% are German funds. And if we look through the portfolio, those 3,300 portfolio companies, that's really a very international mix. So we are contributing to funding, financing, innovation and technological development in Germany, in Europe, and also internationally.
Emmanuel, please tell us about GDP.
Thanks, Jaime. Good morning, everyone. And I just wanted to thank Liz for the kind introduction. This is the first time I come to some summit as an LP. I came several times as a GP, so I know exactly how it works and who's hunting and who's running away. So I need to get accustomed to this exercise now on the other side, so I have to run fast. But more seriously, it's great to be here. Thanks for your kind invitation. CDP Venture is a classic NPI. We started late compared to the rest of Europe. We started back in 2020, and the idea was really to have an enabler of our Italian ecosystem, which was late compared to the other main European hubs. Today, we are a company managing 5 billion euros. 56% of this commitment is towards direct funds, and 44% fund of fund. With the direct activity, we really cover any single step in the life of a startup. So we cover from seed to large venture, and we have dedicated funds managed by our teams to do this. More interesting for the audience is the fund of fund activity, which started as a pure Italian fund of fund activity. We moved from 10 active funds back in 2020 to 40 active funds, Italian funds active now. And since 2023, we have now an international program. So the idea is to attract quality GPs willing to invest systematically in Italy. And the idea is that we invest in your funds, and you get a commitment to invest minimum the same amount you receive from us, and a best effort to do twice the money we have allocated. And this program has now 14 international GPs investing in Italy. We are very pleased with the results, in particular by the fact that on average, international GPs tend to invest more than the basic commitment. They are more or less investing more or less 2 times the minimum that they committed to do, because I think they honestly feel there are very interesting opportunities in Italy, investment opportunities. So that's what we do in a nutshell.
Mercedes, from Axis, you've been long in the Spanish market, key player, certainly. You've been
for water?
Yeah, an excellent role in developing the ecosystem. Tell us a bit more.
Okay, thank you so much for inviting us. Thank you, Liz, and thank you, George and Emmanuel, because you have made the effort to be here today with me, and it's always, and also Jaime, but it's always nice to compare other peers and to know what we are doing, but it's quite similar to some extent. I have to say that I am the eldest, I don't know EIF, but I am the eldest on this side of the room, at least, because this year is our 40th anniversary. Oh. We was created in 1986, and nowadays we can say that we are the main institutional investor in Spain. We have 4 funds under management. One of them is our flagship Fónico Global, that is very well known, launched in 2013 after 2008 crisis. And with this fund, we have already invested in more than 130 funds. We know more or less what is happening in the ecosystem, and it's very nice to have this land view of what is happening, and we know for sure. And it's also very nice to be in all the economic cycle, because you know that you can cover one moment with others. Then we have another direct investment fund that is Fónico Crecimiento, 250 million euros for direct investment nowadays, with 3 strategic sectors that which are defense, building, industrial building, and elderly care. So generally we are sector agnostic, but nowadays we have moved a little bit this strategy to really have focus on specific companies that we want to promote. Then we have another fund for infrastructures, and Fónico Nestec finally is the last fund with 4 billion euros endowment, which was launched with the Secretary of State of Artificial Intelligence, and has been moved to another organization to set, but it was very active and it has a portfolio as fund of funds and also direct investment in scale-ups and technological companies, deep tech. So we have all this activity and...
Right, so 40 years. 40 years. EIF has been 30 years, so indeed you are elders. Congratulations there. So a bit of overview of EIF. EIF is a European institution ultimately. Main shareholders, European Commission and the European Investment Bank. European Investment Bank shareholders are member states. It all sounds relatively similar, but we have kind of different interests, all of these stakeholders. So we've been 30 years in the market. In VC specifically, around 600 funds. An overall portfolio of 1,700. And we invest in equity funds mainly and co-investments with funds. We also have the private debt and infrastructure funds and so on. And to give us a snapshot of volumes, around 7.5 billion in a year. So we have the EU perspective. But we wanted to give you kind of the overview of the organizations, the kind of geographical focus in particular for those GPs that are fundraising and decide, well, there are other options as well, not only in your local market, but you can reach out depending on the geographical. Let's go and quickly a bit get an idea because we have a market development role. There are terms as, catalytic effect. I mean, there's a lot to elaborate on that, but briefly, maybe if you touch on some of those ideas, any of you that want to contribute?
Sure. I mean, yeah, the role for the National Promotional Institutes is to further develop the venture capital ecosystem. If you compare Europe to the US, you see there's a huge lack of capital. This is one thing, but we also have other deficiencies in the market. For example, the market is relatively intransparent. We need more information about the GPs, about the performance, and we don't have a secondary market. There's no liquidity in the market, so if you invest into a venture capital fund, you're pretty long tied to this fund. I mean, usually the funds have a duration of 10 years, but they're extended, and so until the fund is really has paid back the capital, it takes 12, 13, 14, 15 years. So this is quite a long period of time, and in this period things can happen. So I think our mission is really to further develop the venture capital ecosystem by investing, providing capital, investing into funds, which then invest into startups by rights issues, so that the capital goes into the portfolio companies. And we also have to educate the market. For example, in Germany, we have started the WIN initiative. Not sure if you heard about it, but with the WIN initiative has various elements, and one module is a qualification module. So we struck with the ESMT in Berlin. It's a university for further for management education, and with the Frankfurt School of Finance. We struck an agreement that they develop a further education program, a one-year program, which is with a certificate and which educates investment managers investing in working in insurance companies, pension funds, or family offices about the asset class venture capital and how to invest into a venture capital fund. And I think this is really important. So I'm mentioning this because we not only invest, we not only provide capital, we see our role more broader. And one thing is very important, we are always subsequent to private sector investors. So we never push out private sector investors, and we want to be a lighthouse investor. This is also very important. When we select a fund, and we try to avoid the hunt you mentioned, we only try to focus, we select our funds on a risk-return basis. So we really try to only invest into performing venture capital funds. So really selecting finding a dividing line between the top performing and the less performing managers is really important, because you need performance in order to attract private sector capital. This is very important, and this is something we follow very strictly.
It is a key element indeed, and it's a very important point we find for, in particular, those LPs that are not so acquainted with the asset class, to understand what is the role we play. And indeed, it's transferring knowledge is a key element, and is capitalizing all the experience we have in selecting funds, fund managers, that we have exhaustive, let's call it, and due diligence processes. We enter into the strategy, the teams, all the capital deployment, the governance, all these elements, so that we kind of put a stamp on those funds where we invest. So it is a way to attract capital, key element for us. Maybe shall we jump into quickly, in the current context, geopolitical context, we are seeing sort of a shift into certain sectors. Is that the case? How is the general context affecting on our strategies or focus? Because ultimately we are following, we need to make the link between the public policy element, the market reality, and act between the two.
I'll take this if it's okay. I think we have, obviously, we mentioned AI. In the case of Italy, for example, the government decided to allocate 1 billion on a specific fund for AI. And why AI is that important? The idea is not to actually replicate what already has been developed in the US or elsewhere in Europe, but is really to make sure that this change, this paradigm change coming with AI, will be understood from the industrial Italian backbone. So one of the big subjects for us is make sure that through this fund we can finance typically, say, specific, application layers over LLMs and so on and so forth, and make sure that this can be brought also to the Italian groups and the European groups in general. So for sure, this is one of the topics on which we are also solicited. The other thing is, of course, everyone is looking at the defense topic, even if, in my opinion, it's still a bit early to understand how we're going to structure this type of investments, but I expect this to happen. And space, for example, for us as well, it's quite an important, vertical on which we are working on, and we have a dedicated fund. But I would say more in general, if I look at the Italian market and where do we stand in terms of development, one of the big challenges that I have in front of me in the next few years to come is how to involve private big money into the ecosystem. Because we have seen some successful programs. I mean, I spent 18 years in Paris before moving back to Italy. So France, for example, did a pretty good job with the TB program that managed at the end to bring almost 16 billion euros in the French ecosystem in terms of money coming from private money. Because the thing is, we are still very much dependent on public money, which is fine, which is part of the game. But the natural evolution is towards more private capital. So I think one of the challenges is there. And the other thing that, as we are part of CDP, which has several large groups on their balance sheet as an investment, is to actually make sure that we can create a sort of flywheel when we finance, say, deep tech technologies, make sure that these large groups are able to adopt these technologies early on, because it's the best way to actually accelerate companies. Tech adoption and proof of concepts and so on is the basis. So if you have a strong, base of customers and large corporates willing to test technologies, then I think your ecosystem can take off more quickly. So that's, in my opinion, that's the big things, the big teams.
Maybe to add on this, and I completely agree with Emmanuel that mobilizing private sector capital is very important, but it needs information. So private sector investors must know where they invest in, also to justify their investment decisions vis-à-vis their boards. And I think it only works if there are products which make it possible for them. One of the challenges in the venture capital ecosystem is that the funds are really small. So, I mean, we do not have funds of a size of 1 billion or even more. Even if you go down to 500 million, it's you can count the funds. I think one hand count up and down. But it's really, I mean, the problem is that the funds are too small, and some institutional investors, they have minimum requirements of investment tickets. And if the minimum requirement is like 50 million in a 100 million fund, I mean, they own the half of the fund. So I think we need more products which make this transformation of volume possible. And I think this is so developing products also jointly is very important. And what I said before, I believe is really crucial. We have to, the whole sector has to demonstrate excellence in performance. So performance is really key for selecting funds. And I think what we can do as national promotional institutes is really focusing on a proper due diligence, looking at the track records, and also providing information to the private sector about what's out there to invest and to invite them to co-invest. I mean, for example, if I mean any one of you have questions about the German or European venture capital ecosystem, myself or my colleagues are pretty happy to help. And we have also we have a VC Academy. We do it every quarter in Berlin. So the next one is on the 30th of June. It's free of charge. You can all come. And we discuss a certain topic with external experts. So maybe legal topics, maybe performance topics. We also had soft topics before, like diversity. And so it's a lively discussion. And I think it's very important to create transparency what's going on in the market.
Mercedes, and we kind of divided into blocks in a way. First, we were on the discussion regarding the discussion of our organizations. We will maybe to wrap up on that one, and I'll let you answer now, Mercedes. But so maybe in terms of sectors, I think there is a tendency in general from what is EIF's perspective to address EU priorities, and there is a focus into what is security, looking forward, what is ultimately autonomy of the European Union, and sovereignty as well. So those are kind of new concept, new discourse lines, and new sectors ultimately will put great focus on it. And there are, in terms of challenges, maybe indeed of the organizations that we are leading, I think indeed we have, in general, budgetary constraints looking forward. So we need to do more with less. So that's certainly a challenge, and we are on that. Mercedes, you
maybe I would like
to add on that?
To highlight a little bit, because I totally agree with what George has said, that we would like to have this positive signal to the market when we are investing in funds. We would like others to say, I am going to invest in this fund because KfW Capital or GDP or Axis is. So I am sure that they have done a very good due diligence. And we always use as a reference EIF for sure, but at our level, we would like to be seen also like this positive level of quality when doing our due diligence, that I am sure that many of you can complain because sometimes are tough, are long, but this is the final result is the proof that you are doing well. Then regarding the growth of funds, as public employee you need, or as public player, you need to create the right incentives. And I would like to highlight, on the one hand, when we created or we launched Fonicones Tech, we wanted to have to push some managers to increase their ambition in the size of their funds. So if the average venture capital size it was 100 million euros, we invite some players to get involved in bigger funds. So nowadays in Spain we have 200, 300 million venture capitalists that are very positive for a scale up. So sometimes if you create the right incentive, you can move a little bit the market. So that's for me the biggest goal that we have. And regarding now the defense topic that you have bring, it's true that it's a challenge for us. It's not easy to find this, to find the room in the landscape to invest in this sector. And the other day, when preparing this conversation, we all of us agree that it will be interesting to have really an European strategy. Because regarding sovereignty, we lose all the European vision and we come back to the national vision. And for me, it's a pity. And here I launched the challenge a little bit to the EIF to give us something similar. It's true that regarding the scale-ups, they launched, for example, the European Tech Champion Initiative, in which we participated in the first edition, and now we are negotiating the second edition of this initiative. But sometimes the European players, we need to do an effort together.
I think that's a key element, and to me, looking forward, collaboration is a key term, and expanding on the capacities we have and coordinating certainly is something where we can increase the value we generate. But let's enter into a bit more the market overview and how we see it. It is a thriving market, the VC in Europe. We've grown substantially. But indeed, there are challenges. As strengths, we can see that it is a market where innovation can get and gets finance whenever there are good ideas. Indeed, there's capital for that. There are category leaders nowadays. We were at the time playing more as a copycat or more in the consumer space, but then we are worldwide category leaders that we are building there. It is ultimately a desired profession. There are entrepreneurs, quality talent moving into the space. There is ultimately a lot of research and capacity. So all in all, at a European macro level, we can say is a dynamic market. We'll enter into what needs to be addressed, obviously, but maybe from your perspective, a bit of more of the German, Italian, and the Spanish view of that evolution in your respective markets?
Yeah, sure. I mean, looking at the European venture capital market overall, I think it's really important to say that we have a very broad base of talent and the intellectual property. When you look at the startups, when entrepreneurs decide to set up a company, is really outstanding. I mean, if you compare that with 20 years ago, when you could become a millionaire with developing ringtones for mobile phones, I mean, those times are over. The startups are very much specialized. There's a lot of IP coming out of the universities in Germany, a lot of technical intelligence from, Germany, we are a federal country with different centers of excellence, be it AI, be it mechanical or electrical engineering, or software development, or cybersecurity. So we have, there's a lot of good intellectual property to invest in. And the other good news is if we go one level up on the fund level, also the fund managers get more and more specialized. And specialization, from my point of view, is a form of market evolution, which eliminates risks. Because if you know what you're investing in, and if you know to select the good startups from the bad ones, it will improve your financial performance. So risk is being significantly eliminated from the whole market by professionalization. And there's a second factor which eliminates risks, and this is true for Germany and also for the other European countries. That's the involvement of the government. So there are a lot of initiatives. I mentioned WIN, you mentioned TB. There are across Europe also the EIF is doing a lot. So the initiatives really supporting the sector, easing regulation, and really also putting capital investments into the market is also something which takes off risk. So if we look at Germany in particular, I mean, our group, KfW Banking Group, has created this WIN initiative. We have involved private sector investors from various fields to make commitments to really invest into the venture capital ecosystem by providing capital or by developing things which are good for the venture capital ecosystem. So this is something which is really important. And this is going on, and the German government is very much determined to continue to do this. From our perspective, we started 4 years ago with this Wachstumsfonds Deutschland. It's a growth fund for Germany. It's a 1 billion fund of fund, which is a financial innovation which we structured ourselves so that it fitted the needs for institutional investors as well as family offices. So we structured it in a way that was Solvency II compliant, so this is something we could contribute when we talk about products. So I think also on the product side, the market is really developing. And
maybe Emmanuel, just conscious of time, to give you some space on the Q&A. Tell us about, because Italy, there's in terms of GDP versus, and it's a general problem ultimately. Investment capital in venture capital compared to GDP is low.
It's still low, yes.
How do
and
you?
It's, I mean, the market has been growing 30% on an annual basis since 2020. So that's the effect of GDP coming to the market. But that's just the beginning. So the rest has to come also from private. Going back for a second on the subject, it's true that the deal flow, the type of projects we finance today is way different from what it was like 20 years ago. At the same time, I think GPs also have changed a lot. We have a combination now of like, when I actually started venture capital back in January 2000, VC firms were made of former consultants or former investment bankers. Now, half of the team have some entrepreneurial background. So they have a much better understanding on what it is. And I think I support, of course, the idea of getting bigger GPs, and there's an issue of critical mass, especially in Italy. Funds on average are more at the 50 or 60 million, not 100 million, as mentioned in other countries. But on that one, I would also spend 1 minute. I mean, there's a real issue, there's a real arbitrage to be made. So I see a lot of funds growing mass, but losing in performance. Why is that? Because you have a lot of platforms. You start having GPs creating platforms and adding different type of funds. But you have to make sure that you have distinctive strategies and you are very effective on that. For example, you can be very good at seed and pre-seed, and maybe if you don't get really well organized, you can start say a large venture fund, and it can be disastrous, and also it's very much driven by the cycle. So the thing is, of course, we need bigger GPs, but we need also to remain consistent in terms of the type of things we want to do, and have the right people on board to do those things. And maybe the other thing I wanted to share with you is, I think on the amount and the size of the funds, we should honestly stop looking at the US, because US is a different market. And the main reason for that is that the type of exit you see in the US do not exist in Europe. So as a matter of fact, you can have few exceptions of companies going to US and getting bought by US buyers, but it's less and less easy because, I mean, you have sovereignty issues, and now European states are more sensitive to this type of issues. But we should keep in mind that we need to remain very capital efficient in Europe, because exit levels are low. And so if you invest too much in the money and too much money in a company, and this should be an issue for the founder himself, you have to be careful in not raising too much, and from a GP perspective, in not allocating too much, because mechanically your multiple will go down. So
proving the model, yes, I always say to the GPs, first prove the model, see that it performs well, and then grow. Obviously, we look forward for growth of the GPs, but first prove. Mercedes, maybe, give an overview of Spain, how you see it, the market, and briefly, because we're running out of time, we need to give you space.
Okay.
And we want to mention something more on our collaboration, but...
So only some headlines. Liquidity, for me, there is this lack of liquidity that you have already mentioned. And as we are one of the main investors in Spain, it will be very difficult for us to do this kind of tools. And we are asking EIF again to help us in trying to create this positive outcome and some relax for the investors to repeat again in the asset. Then the second point for me it will be to attract corporates, and we have tried, and we have got it with Fonico Next Tech. We were capable to attract Telefónica, Repsol. So we don't have the big insurance French companies, for example, but we have other players that can play a very good part in our ecosystem. And for me, corporates in Spain are an Indra, so you can work on this and really create a new investor base. Part to give some return to the previous ones that are waiting for it. And finally, I have to mention briefly only España Crece, that it will be a new initiative with the last part of the Recovery and Resilience Plan. Some capital will be injected in our partner in ICO as new capital, 13 billion, 10 billion, it will be pure capital, and the other 3 billion will be to do grants. So with these new resources, all the group will be capable to mobilize 120 billion euros in the coming years. So there are no much more details about this program, but I am sure that we will be asked to do much more and with more resources.
So from the European perspective that we have, indeed, we see a tendency in terms of sector change more into deep tech, this coming out of the COVID times, and then that's kind of a refocus of the EU. Challenges we see, indeed, sharing the liquidity moment. We see that we need more capital, we need bigger tickets, we need institutional capital. The investors we have in the funds, ultimately, the amounts invested are limited, so it's quite spread out, and we need to work in that respect. But just touching on in 1 minute, public-private partnership is a kind of a flagship or it's an instrument clearly that Europe is using to foster innovation, where we see China is more on the subsidized side, US is more on the kind of market driven, even though at the very beginnings they had also their subsidies. But maybe elaborate, and we've collaborated in many initiatives. In Germany, ERP, for example, ITTEC, in Spain as well. How do you see, in particular, if we talk about ETCI? Tell us about what's your view of it. Let it elaborate in 1 minute, if you can, and contribute.
This is a challenge. Public-private partnerships, I think, yes, they are important. They must be very much focused, and there must be a clear goal what to achieve. ETCI, you mentioned, is certainly something which addresses the lack of large funds which we have in Europe, and this should really be a cooperative approach, creating larger funds which can invest into larger rounds. We started back with 4 years ago with the launch of this fund of fund, of this 1 billion fund of fund, which is a kind of public-private partnership, because we committed roughly 1/3 of the capital of this 1 billion together with the German government, and private sector investors committed 2/3 of the capital. And it's very much targeted to investments into later stage venture capital funds into this sector. So this is, and Europe as a whole benefits from it. So I think really delivering products very much tailored to, and that the private partner can also go through their boards and get approval for this public-private partnership is very important.
So it's a tool to address growth. We've over here, Germany, Italy, Spain have participated in the ETCI 1. We are launching ETCI 2 to address that element. But let's park it there. Let's have a bit of a room for questions if you are still
Hello. Hi.
Alive.
engaged.
Thank you for the insightful conversation. My name is Renaud Visage. I'm the GP of Slate Venture Capital. I was a founder before. I'm an LP in funds. I have a question that I don't see addressed at all in any events. The most successful funds in Europe, 90% of the LPs are from the US, and they started with all of you as first investors, but at some point they go institutional with endowments in the US and pension funds in the US. Why do you think that is, and how do we keep the best performing funds who will have the best returns in Europe, the proceeds stay in Europe and get reinvested in Europe?
I think it has to do, I mean, the exit topic is a major topic, and we have to find a solution. And we don't have open capital markets to actually attract European assets. And we have very few consolidators in Europe willing to actually buy and build large conglomerates in the tech space. So I understand that's pretty natural for both corporates and funds at some point when they're successful to actually look at the US. The thing that is changing today, in my opinion, is that I'm not sure we will keep this level of freedom in selling assets everywhere. So Europe is changing, and so we have to make sure that these consolidators, European consolidators, will come up, will emerge at some point, because I don't think the different governments are willing to let, say, the national champions leave like that. And it's something relatively new. But I feel like it's really, at least in Italy, these subjects are top priorities for governments. So they understand very well that venture capital is part of the economic policy of the country, and they ask themselves, how do we make sure the best assets don't go away, don't walk away?
I would fundamentally disagree to your question. It's not true. We have very good examples. I don't want to mention names here on the stage, but we have very excellent performing venture capital funds, which are European funds in each country. And so I think we really need to further develop that. What you say, yes, capital market, European capital market is important, looking at the exit channel. What Mercedes said, mobilizing corporate investors buying later stage companies so that DPI is being generated is very important. I think that's something we need to work on. Then the 28th regime is also important, so that we get going. So I think it's pretty clear that there are a couple of tasks to further develop the venture capital ecosystem. But I fundamentally agree with your question when you say that the US funds are outperforming the European funds. This is also okay. But this is also contradicted by the stats when you look at at a European level when asset managers are comparing the performances of their portfolios. European venture has outperformed in the last decade US venture on average.
No.
In the US, and they are the ones who benefit from the best performance of the European funds.
Yeah, we need to activate more private sector capital. That's what.
On the growth
side. On the growth
yes,
side, yes,
I think
definitely.
Indeed, getting to the dimension that we can indeed also as an element attract more institutional capital. And there is also quite a dependency on inflow from foreign capital into our ecosystem. But there are indeed, I agree with that, with it has been said, the returns, I mean, it's a BC return space, Europe. We have, in certain cases, outperform other markets as a global, and we have the elements for attracting that capital. So certainly a lot of prospects for Europe, but we need to keep working. Any questions, any further questions, if we have time?
We do, we can take one or two more. Now's your chance.
Ask a question. I'm Paul Murphy with Lightspeed. We're a global venture capital fund, 40 billion AUM. I lead the team here in Europe. And what I wanted, it's a question and a bit of a comment, but probably more an observation, which is we have companies in the US and companies in Europe that are in exactly the same space. So we were the first investors in Mistral AI. We're investors in Proxima Fusion, an Italian founder based in Munich, but also Anthropic and Helion Energy in the US. What I think is interesting is, in our observation, the ability to concentrate capital is a necessary ingredient to winning in the market over time. And there's only a few funds like ours that can put capital into Europe. But what we find is that we often are, it's Lightspeed, it's General Catalyst, it's Andreessen Horowitz, but the list kind of fades very quickly. And so I don't know if you're thinking about ways to kind of mobilize. I know that what you've done is already incredible, but even more capital into kind of winners in Europe so they can really stand on the stage kind of head to head with the best companies around the world, both in the US and in China.
I think that what you mentioned is exactly the European Tech Champions initiative in this sense, to retain for a while. You cannot say forever. And when we invest in companies directly, we ask them to stay in Spain at least while we're investors. So if you want to leave, okay, but then you have to allow me to leave the company. And you cannot say forever, but at least to retain for a while companies, to allow them to grow. And it's true that sometimes we look at the States with a view of like they are much better than us in those. There is an amount of capital that is incredible. You cannot compare. We have to work and try to promote these tools and try to mobilize private money, because we can do what we can do, but we are not so bigger or so strong to do everything.
It's a key priority, and in this European Tech Champions initiative, is this fund of funds that the first fund of fund vehicle was launched in 2023 with 3.6 billion, and exactly addressing this concern, trying to support large capacity fund managers across Europe to retain that and be able to deploy large rounds, alternating large rounds, which is certainly we're launching a new one too.
I would like to add that maybe at some point there were some negative players in the market and some investors that I am not going to say names, but they created like an extra valuation in companies that has resulted in very negative next rounds. And those players are not so reliable. So we have to maintain also our brain in a cold way, not to be so in a rush to make sometimes the wrong investments.
Last one, folks, last one.
Hi, I'm Ben Wers. I'm a partner with Bright Eye. Just to follow up, I guess, on Emmanuel's comment about maybe it being harder for companies to change geographies or European regulation, making it more difficult. I just wanted to double click on that, because honestly, outside of defense, it's not something I've heard too much, and so would love to hear more about whether you think A, that's actually going to happen, and B, how you think it might impact valuations, because it's hard to build a big company if you put a lot of constraints on it. Thanks.
So, I mean, I think that at European level, there has been a fair amount of public money that has been deployed all over Europe. And I think that I have the feeling that we have practical cases of companies willing to move straight to the US and say, okay, that's my big market and I think I can raise more money, and maybe they don't mention that, but they think that's where I'm going to find a buyer at the end of the game. And I think this is a bit in contrast with what public, opinion leaders think of this. So at some point we will have some, we already have legislation in each single country in Europe with certain limits, and unfortunately, because I think it doesn't help that much liquidity, this could become more problematic over time. So how we can generate and create the European aggregators, that's the thing. I think we should maybe focus more on this rather than saying, okay, we won't be able to actually get into easily international deals. By the way, I mean, I mentioned US, but China, it applies to China as well.
It's only to add on this, it's not only investments, I think it's also the procurement side. I think the European states have discovered that, and increasing the state procurement and becoming a customer of startups or tech companies is really important. This also generates cash flow.
Maybe some takeaways of what we've discussed. So Europe is evolving positively in its own way. There's quite a distributed market. It's not only in certain hubs, so it is quite spread away. Returns are to the level of what is expected for the asset class, and we have a very good base of it. We have some challenges, indeed. We need to address the liquidity concerns. We need to attract further LPs and capital and address the growth stage. But it is thriving, so let's keep it up, all of you.
Thank
Thanks.
you.